So before jumping into how the Federal Reserve makes money, let's first clear up what the Federal Reserve actually is. A lot of stupid, dumb people confuse it with just another government office or think it's just some economists messing around with interest rates. But in simple terms, the Federal Reserve, or the Fed, is the central bank of the United States. What does it do? Basically, it keeps inflation under control, promote employment, and stabilize the financial system. So in simple words, it prevents the economy from crashing and burning. Now, unlike your local bank, you can't walk into the Fed and open a savings account. It doesn't give out car loans or credit cards. What it does do is influence the entire economy by setting interest rates, controlling the money supply, and overseeing the health of big banks. Think of it as the engine room of the U.S. economy, powering everything behind the scenes. All right, now let's get to the spicy part. How does the Fed actually make money? Most people think the government prints money and spends it. But the Fed is pretty different. It's actually profitable, and that's on purpose. Crazy, right? Here's how that works. First, open market operations. This is where the Fed buys U.S. government securities, like treasury bonds from banks. These bonds pay interest. That interest goes straight to the Fed's pocket. Now picture the Fed doing this with trillions of dollars. That is serious income. Secondly, lending to banks. The Fed is what we call a lender of last resort. When banks are in trouble or just need short-term cash, they borrow from the Fed's discount window. Of course, the Fed charges interest on those loans, which, not to mention, is another revenue stream. It's like the Fed is the bank for banks. Fascinating. Third, interest on bank reserves. Here's the twist. Banks are required to keep a portion of their money in reserve, and a lot of them park that cash at the Fed. The Fed actually pays interest on those reserves. But at the same time, it earns interest on its massive portfolio of bonds and other assets. That gap is called a spread, which helps the Fed earn even more. Let's also dive into what's going on currently. As of May 2025, the Fed has kept its interest rate steady at 4.25%, GDP slightly contracted, and inflation rose just 2.3% year-over-year in April, the smallest increase in more than 4 years. That's why the Fed's playing it safe. Analysts expect the first rate cuts might begin around September 2025, but the Fed's watching the data closely. In the meantime, the Fed is still raking in interest income from its huge pile of government securities, just sitting back and earning. So in conclusion, the Federal Reserve makes money by earning interest and not by taxing people or collecting fees, which is a common misconception. And here's the part most people don't know. After covering its own expenses, the Fed sends the rest of its profits straight to the U.S. Treasury. So the government and, in a way, taxpayers get the money back. It's not a business, as it's not out to make profit. It's a money-making machine designed to keep the U.S. economy stable and smooth. If that made sense even just a little bit, then make sure to like and, of course, subscribe. Meet you in the next one.